I'll put pants on for this special occasion then.
Yeah, pants are kind of, a 2021 thing. 2020 it was questionable, but 2021 pants on Zoom is a good thing.
We've got new rules, a new standard, if you will.
Yeah, new etiquette, new Zoom etiquette.
I like the old etiquette better.
Yeah, right. Well, it's gonna be
pretty soon we'll get to wear a suit and tie in this thing, and then all bets are off at that point.
That's when Shane retires.
Yeah, that's when it's over.
I was thinking about spiking the coffee this morning just to set a new etiquette for 2021, but I figured, nah, we'll start the new year off. Start it off right.
With the things that have gone on this week, spiking the coffee might not be the worst thing you could do, to be honest.
That was kind of my thought. This first week of 2021's been banner so far. So I mean, can it get any better than that? My goodness. Value. Jeez. Yeah, there's more to come in January alone. So
yeah, we're not even done. This is the tip of the iceberg. So.
No. Why don't we go ahead and get started? Welcome everybody to 2021. Love having you guys here. See that everybody survived the Christmas and New Year holiday. Survived the first week of 2021. It was chaotic to say the least if you've been watching headlines. From a mortgage industry perspective, there's not a whole lot that has changed since our last meeting. There's been a little bit, and I'll bring you guys up to speed on that. But you know what? It's 2021. I think I see one or two new faces in here. So I'll go ahead and we'll do a quick introduction. Anyway, we're starting off 2021. I think everybody knows this by now, but my name's Kirk Brewer. I'm the branch manager for Finance of America Mortgage, the downtown Chandler branch. And I've been doing mortgages for 20 years now. So every time I think I've seen it all, somebody pulls out something new on me and keeps me coming back for more. So this holiday season was one of those times. People just kept bringing new scenarios at me that I hadn't seen before. It was kept the holidays hopping. So, and my sidekicks. Hey.
Yeah, you were doing it's like a Brady Bunch thing. You just look down.
I know, it's awesome.
Look across. Hey, yeah, everybody. My name, for those that don't know me, hopefully you do, but I'm Shane Sauer. I'm sales manager here at Greystone Title Agency. Kirk and I have been doing this for since June, I think, something like that. All right.
Yes, sir.
Yeah, happy New Year. It's going to be an interesting year coming up. I know with rates the way they are and inventory levels where they're at, it should be a wild ride in 2021. But hey, you know what? It's all about marketing right now. It's all about getting in front of folks and doing some farming. That's what I've been talking to most people mostly about right now. It's just farming and getting down there. And I do have some questions for Emma later about some Facebook farming too, because there's a lot you can do with Facebook. I know. I don't do it, but I know you can. Guilty as charged.
Yeah. And as everybody can see, we have Emma Totten with us as well, co-founder and owner of Remodel Social. She is a fixture here with us to help all of us get better with our social media. So I can't think of a better way to kick off 2021 than to have Emma with us today. Mm-hmm. We'll bring Emma in later with some tips to help us start off the new year with our social media. Let's dive right into mortgage rates real quick. I share with you guys where we're at. Let's see here. I already hit the wrong button. Bear with me. It's the new year. I'm going to be just get re-familiar with where the buttons are at on this income. There we go. How's that? All right. So if you go to our website, theloangeeks.com or loangeeks.com, we can be found at both. There's several ways you can access rates. Right up on the top menu is clearly the easiest, but if you just scroll through the home page, you're going to find multiple links to get to rates. We want to make sure those are accessible. We know what people like to know what rates are. That's always the first question we always get, right? What are mortgage rates? What are mortgage rates? These rates are updated daily, Monday through Friday. So you know they're fresh, they're relevant, and they're done by me. So I'm literally out there daily keeping these rates updated. So if you click on the mortgage rates link, it's going to take you to our rate page. These rates are fresh as of this morning. Not a whole lot of movement, if you guys recall back to where we kind of were ending up prior to going into the holidays. We've seen a little bit of movement. We were actually at 2.25% on the 15-year fixed conventional through the holidays. We saw a little bit of a tick down. Right now we're sitting at 2 3/8, 2.375, and that's at par, which is still great. I mean, we had kind of been hovering at 2.5 for a good part of the second half of 2020. Our 30-year fixed, that's ticked up a little bit too. We were actually solidly at 2.75 for a couple of weeks there through the holidays. And that's ticked up to 2.99. So we're still sub 3, which, I mean, it's hard to complain about having a 30-year fix below 3%. And then our govies, they're holding firm. If you guys recall, after the CARES Act hit and COVID and all that good stuff, the govies had ticked way up and had some premium pricing built in, but we're sitting really nice at 2.75 on those at par. And then last but not least, our jumbos. Those finally came back in line too as we were heading into the holidays, and they're sitting really nice, hovering right at that 2.875, 3%, depending on qualifications in the program. But rates are looking good. Shane kind of touched on it a little bit. Heading into the new year, you know, it's going to be more of the same, at least starting out. We saw a major hit after the Georgia runoffs to the bond market. The 10-year and the 30-year bonds, they got slammed. It didn't translate a lot on the mortgage-backed securities, however, which was kind of interesting. We saw a little bit of a move, but nothing that caused major movement by 0.25%, 3/8, 0.5%, nothing like that, even though we saw it on the treasuries. So hold tight with that. The way we're looking right now with, and this isn't a political statement, it's just factual, Democratic control of all 3 parts of the House, the Senate, and the executive branch. There's going to be upward pressure on rates based on potential tax policies and things like that bonds don't like. So be mindful of that. If you have buyers that have been on the fence, tell them, don't wait. Now's the time to strike. Inventory's there. It's just getting gobbled up real quick. That's probably a good segue to hand off to Shane with the reports that he has and what he tracks to inventory. So,
yeah, it's going to be an interesting year in so many different ways. You know, looking at some of the stuff that I can see, and then you know, I know that some of you get the reports that I send out on a weekly basis, and some of you don't. And it's another great opportunity for you to start getting these things. But I really want to show you a couple of little things that I found interesting this week. You've all seen, hopefully, you've all seen the Altos reports. And you can kind of glean from these things what you will. You know, you've got median list price, days on market, inventory, all that stuff is here. Quick little segue, a little story. I've got a guy that I know who just sold his house. Well, he and his wife want to buy another house, and he just sold his. And I told him, you're going to sell this thing super fast. Well, he did, and he did it 25,000 over list. The buyers waived the appraisal, the whole 9 yards, and now he's stuck with the other side of this is trying to find a place to buy. Well, you know, as we all know where inventory is at, he's bound and determined he's going to move into an apartment for a while. He and his wife, well, they're not going to rush into this. But if rates do go up, like Kirk was just alluding to, it's going to be very interesting to see. You're not going to get the same deal the longer you wait. If rates do go up, you'll be crying for that low rate, and you're not going to get it as low. I don't think it's going to go sky high. I mean, I don't know what you feel, Kirk, but I don't think it's going to go out of the ballpark. I mean, but it probably will go up. I mean, a little bit.
Yeah, I'm not seeing anything at this point that would cause, a major spike, so to speak. But yeah, from just a sheer Federal and Federal Reserve political and monetary trend, I think you could conclude fairly safely that there's more likelihood rates will drift higher than even lower than we had seen them at this point. Things are going to be evolving. So it's going to be really interesting as we're working through the first quarter and we're having these meetings weekly.
Yeah.
To really monitor where things are headed, because we are starting off the new year just after a presidential election and congressional elections and runoffs and all that contentious stuff. We're going to see some stark 180-degree policy changes. And it's going to be very interesting to see what that translates to for our industry. Not to mention a stock market that is insanely overvalued. We're in a 10, 11, 12-year bull market that has gone stratospheric, and that's always scary. Is this a blow off at the top before a secular bear market? Don't know. But stay tuned. There's going to be some interesting things for us to discuss this year.
Yeah, I agree. And, not only just that, but, dealing with the COVID, the whole rollout with the vaccine, that's a whole nother thing apart from this. And this is the first quarter thing. I mean, most definitely. So hopefully by the end of the first quarter, we'll see some clarity even with that. But,
well, and what's that tell you? We're 15 minutes in today, and I think you're the first one to say COVID after 15 minutes. We've had so much other stuff going on.
I win.
COVID's that far down.
You can send me my button,
Yeah. But it's still there, and we're still dealing with it.
We are, and most definitely, and it's a very real thing. But getting back to that story, I mean, this guy was gonna rent. I'm looking at median rents, and he wants to stay in Gilbert or Chandler, and I'm like, well, median rent in Chandler right now is almost $2,100 a month. I mean,
yeah, rent's not the solution.
It really isn't. But what choice do you have? And good luck finding a rental on top of that. So there's a lot of factors at play there, and I'm like, I don't understand what you did there. But whatever. That's not my life. But interesting stuff on this thing too, and you can see the big hook here, just from December 11th here to January 1st. The big, huge upward tick on the home prices in Chandler. And I'll show you another report here shortly, which is really gonna. Well, it blew my mind when I put it together on Monday. But this is the cool little Altos report. So if you like this thing, and it's got a lot of cool, little doodads here, you can check out all these little drop down menus here. You can see all this stuff. You can see what came on the market last week and what sold, and you can see, of course, what's selling it's going much faster than what's coming on the market. With that, I kind of, and hopefully you can see this. This is always my weird transition. I don't know if this comes over okay. The Valley staff is up right now. Can you see it?
Yeah, we're good.
Okay. Sometimes it doesn't transition real well. So folks that have been on this show before have seen this, and I've been presenting this for a while now, and it's kind of morphed into its own little thing. I've got a distribution list of a number of agents who get this. I put it together on Mondays, send it out to folks. I do send it in a JPEG if you want to post it or whatever you want to do with it. But it's nice to have all this stuff in one little group right here. What I'm really getting out of this, and the more I've been doing this, and I think I've been putting this report together since maybe August, something like that.
Yeah,
it's been a while. But all this red It's really interesting. And some of the bigger cities where they had the more of the inventory, your Phoenixes, your Scottsdale, they are getting pummeled. I mean, Scottsdale alone, I've been watching that, and I think when I started doing these reports, their inventory was up around 1,000 units, and now they're under 700. They're and trending down. Phoenix, the same thing. I think they're up like 13 or 1,200 units, 845. I mean, that's not. I mean, it's really, and this is the second consecutive week that it's had that number is 66 on the downward there, and I'm like, it's stunning to see what's going on. But look at median home prices, and Queen Creek at 604, like 605 right now. Gilbert finally went over 600,000. Chandler sitting at 533 right now. And I brought this out to the 90-day as well, so you can really see it in more of a long term. The 7-day is very volatile, as you know, and it could change. And it is median; it's not average. It should be fairly close, but median is not average. But this will show you a little more of the whole picture of what's going on. And these home prices just continue to go up. And I think that's going to continue through 2021. I talked to an agent here yesterday, actually, who again, and we talked about this a number of times on this program about all these foreclosures supposed to hit the market. And again, I have my doubts about that, but she's very adamant, and all this inventory going to hit the market. And what is all this inventory? What does that mean? I don't know what that exactly means, but if we do have that, that'd be great. And right now it's been a real search that I've talked to a number of agents, at the end of last year and so far this week, about marketing strategies, and about, we're going to have to dig deep to get these listings. We're going to have to work harder than we probably have had in the past to try to find and get people off the fence to list those properties and get them out in the market. The challenge, of course, is for them to find something to buy. It's always a challenge, and builders are behind, and things that are being built now aren't going to hit the market for a few years yet. But it's more of a wrestling match. So digging deep and getting Emma involved with some of this would be really good, because Facebook marketing is fantastic. Email marketing, I mean, things where you can get the word out, is a better bang for your buck to market. I think this is what we're going to have to look at more this year. I mean, direct mail is still awesome, but Emma can help in a lot of ways. And I'm finding out more of this, and I got to be smarter with this, and everybody has to. I mean, Facebook's such a powerful tool, and you can target market with Facebook, which is awesome as well. Is that correct, Emma?
That is correct, Shane. Yeah, so for those of you who do not know me, my name is Emma. I'm one of the co-founders and owner of Remodel Social, which is a service that provides high quality and local content for Arizona real estate agents to put on their Facebook business page. So if you don't like posting on Facebook, you might want to hang on to my contact information. I'll throw it in the chat, but you can also get it from Shane and Kirk anytime. And I just wanted to tell you guys today in 2021 that we have some new changes coming to Facebook business pages. And so they publish this whole thing about it. There's a lot of things that are changing, but there's really only one that's kind of important and that you might actually notice a real change from. And so I just want to show you guys what that is today. So let me just share my screen really quick. Okay, can you guys see that? Okay, perfect. So what is changing is Facebook is getting rid of page likes in exchange for page followers. This has been a point of confusion for many people for a very long time, the difference between followers and likes. They were essentially the same thing. I used to just tell people, think of them as the same thing. But technically, liking a page does not necessarily mean that you follow it. So you can like it, and then you can choose to not actually follow it. So you wouldn't see the updates from it, but you still are lending your support via a like. Similarly, you don't have to like a page to follow it. If you want to see the updates, but you don't want people to see that you are following it, then that's a way to do that. The whole thing is very convoluted, and it seems that Facebook has maybe realized that. And so that is why they are getting rid of likes, and now you will only have followers. So for a lot of people, this is not going to matter at all unless you have been doing something very weird to only obtain likes and not followers. Then this is really not going to impact you at all. For most people, you can see I pulled up our page to show you. So I have about 130 people that like the page, as well as 138 people that follow the page. So my followers are actually higher than my page likes are. So this really is not going to matter for most people, but I want to flag it for you guys just so that you know when this does go away, don't panic. You still have all of your people. They just are named something different, basically. So yeah, so that is one of the big changes coming in 2021. They are kind of teasing that there is, you can see I pulled up this article, the new Facebook pages experience. You know, they're talking about redoing the page designs and increasing security and that kind of a thing. So they're kind of teasing that there's going to be a lot more to come here, but right now this is really the only important thing that I wanted to mention, just so that you're not confused when this comes about and you lose all of your page likes. So yeah, that is pretty much it for what I have for today, unless we have any questions we want to go over.
I do.
And
I
always do.
And this will be really quick, hopefully. So Emma, been talking a lot with agents about email lists and email marketing and that kind of stuff. And is it true? And I'm pretty sure it is. So you could take a list of email addresses that you got to market to, and you could drop them into Facebook and target market with that?
Yes, but it has to be a pretty big list. They change the requirements for how big it has to be all the time, but they don't want you to be able to have like a list of, let's say, 10 people, and you know those people are whatever thinking of listing their house, and then they suddenly get these super creepy ads that you have highly targeted because you know those 10 people and you can highly target that ad. So they don't want you doing that kind of stuff. So the list has to be pretty sizable, like in the thousands, is what I've seen. And then also you're going to incur additional restrictions with doing that kind of stuff as soon as you declare yourself to be in the housing category. So that is always changing. Their restrictions on that are always changing as well. The way to use customer lists in a way that is always going to be helpful is if you can get one, say, if you got a bunch of people who live in a certain place, you can create what's called a lookalike audience. And basically it's going to take the demographics of those people and create a bunch more of them. You know, these are people who look like these people in terms of age, where they live, if they have kids in school, that kind of a thing. And so then you can create basically just from a small list of, you know, these 100 people in Gilbert, it can turn it into a big list of people that look like that. So that can be helpful for ad targeting as well.
So if you wanted to market, let's say, if you were a real estate agent looking for listings in a certain subdivision, could you take a list of emails in a subdivision and use that as a marketing tool in Facebook?
Hypothetically, yeah, but it would have to be a pretty big list.
Yeah.
And also, I'm not sure how it works because the thing that came out of the HUD lawsuit like a year or two ago at this point was that if you are doing any location targeting on Facebook, you have to have at least a 15-mile radius out from any one point. And so I'm not sure if they might flag if you had like all those people that were not in that big of a radius, you know, if they were all in the same neighborhood or subdivision. I'm not sure if they would flag that as too small of a location. I've never tried that specific thing, but you might run into trouble with it. I'm not entirely sure.
Yeah, there's been a lot of talk of that of late, and I'm like, well, I think you could do that, but again, I don't know the inner workings of Facebook like you do.
Yeah.
So, you know, and well, how do I do that? I'm like, well, you get somebody to help you do that. You know, you get a professional. Yeah.
Yeah, well, and I still have, so I have like Friday consultation blocks available for people. I do the 30-minute complimentary consultation. So if people do have questions like that, they have a specific list they're wanting to try to use in some way, or specific messaging or ad idea or that kind of a thing, they can always book a time with me and we can talk through the logistics of that.
Yeah, I've talked to a number of agents about targeting out of state, potential out of state buyers as well,
Mhm.
which I know you can, I know that's something you can help with as I talked to somebody about that yesterday. In fact, they want to target, say, Illinois because they're from Illinois. And they think a lot of people are going to be leaving Illinois and coming to Arizona because why not? I did, so um, I know you could set up things to, pages and things to attract those type of buyers to your page and, market to them.
Yep. Yeah, you definitely can.
Absolutely. Definitely. Yeah, and I think I recall that HUD lawsuit too, and it had to do, is very similar to the mortgage industry regarding redlining.
Yes.
Wanted to make sure that whatever demographic you were targeting, that it wasn't so focused that you were either negatively targeting lower demographic individuals, maybe from a financial standpoint, or simply excluding those people for something and going after higher demographic people. So they figured if the geographic radius was large enough, there would be a certain amount of homogenous nature there that you'd have both interspersed, I think. Going back to your list, Shane, it's interesting looking at that as we're kicking off the new year, or your report there. I love that thing. I'm wondering, when you were putting that together, what were your thoughts on seeing, some of those declining inventories came out of the holidays? Do you think, how much of that do you think is holiday driven, simply because people don't want to list their home when they've got the Christmas tree up and presents and, relatives maybe coming in even despite COVID or whatever the case may be? We do tend to have some seasonality associated with when people list their homes, right? I mean, I don't have the statistics going back a few years to see how much we decline through, say, Thanksgiving through New Year's, but what are your thoughts there?
Well, and we talked about this towards the end of last year. I know we were talking about, the seasonality of it all, and we do see a change in it, but seeing still the declining market during the holidays, I would always thought we would see less of that, than more than, see kind of that lessen up. And I know we gained a little bit of inventory outside the valley here, but I mean, this is minimal. These are minimal gains. Um, it didn't seem like anything changed a whole heck of a lot, to be honest. The numbers were pretty, I mean, if I brought up the week prior to this, you see the same declines here. I'm still seeing trending stuff going down. Prices still, median home prices still on the upswing for the most part.
I think buyers were still pretty active during the
They
holidays,
were,
from
yeah.
what I saw. I mean, I was busy, which it's hit or miss. Typically, we slow down between Christmas or Thanksgiving and New Year's from a lending perspective. But obviously with rates being down, we still had people wanting to refinance, but the
Yeah.
business stayed very steady as well.
I mean, we saw some increases in average days on market. We saw a little bit of that. So that could be some of that, but not as many buyers out there maybe, and homes were sitting a little bit longer. But I mean, not too much longer. I mean, but for the most part, these were on the upswing. I mean, they had the average days on market. So, but yeah, the inventory numbers continue. I mean, it's been pretty consistent with the downward pressure on this stuff. So
Yeah.
I don't know. It's more shocking for me to see the numbers continue to go down at the rates they're going down. That's where every Monday when I put this together, it's like, I can almost count on negative numbers in this column here, and this week was no exception. So, homes still sold during the holidays. The train's just still going down the track. you know?
Yeah, there's just not getting replaced with new listings.
Yeah, that's what it is. In fact,
It'd
I
be
talked
interesting to see through January. We'll probably see that trend at least continue through January, I would think.
I would assume so. I talked to an agent the other day, and these numbers are grabbed from those market updates that I do. Now I had an agent tell me the other day that she was showing properties in Chandler, and she told me that Chandler single family residents, the SFRs in Chandler, I have 137. She told me 98. So all I know is it's low. So let's go with that. I mean, I don't care. 137 to 98 ain't a whole lot of difference, to be honest. But 98 is even a little more alarming to me. I mean, to be honest. But yeah. It's going to be a crazy first quarter. We'll know by the end of this month. If we don't see a little uptick in this, we'll know. Okay, well, they can't get down to zero. Can't happen. And she told me, Maricopa County SFRs were at like 4,100 or something like that.
Yeah, it's like 2 weeks supply or less than a 2 week supply or something just crazy. Yeah, it's going to be interesting to monitor that as we, start heading into the new year and activity starts to pick up. So, hey, you want to open it up for any questions anybody's got as we wrap it up? We've rolled just slightly past 9 a.m. here, and we like to keep it short and sweet if we can, but we have no problems going over if we've got some topics folks want to discuss. So,
a grocery store video would have been great.
Yeah, how's the toilet paper and milk and eggs supply? How's that looking? Becky said she's at the grocery store. I appreciate your dedication to being here, Becky, even in the grocery store. That's awesome. We love you.
Somebody showed me a picture of I think it was Bass Pro. There's a guy that stopped in my office this week, an agent. He's a gun enthusiast, let's say, and he showed me the shelves at Bass Pro where the ammo is, and it was completely wiped out.
I wouldn't call myself a gun enthusiast, but I am a gun practicalist, if that makes sense. You can't find ammo, and if you can, you're paying 4 or 5 times per. Typically, like a 9mm round will run you, let's just say, 25 cents. Right now, if you can find it at $1, you're doing good, and that's if you can find it. And it's been that way since COVID hit. I mean, toilet paper and lead, can't find them. Crazy. That's
why I've taken to putting a lawn in the front of my house so I can go out. If I'm out of toilet paper, I can just do the butt scoot across the front lawn. My neighbors just look at me and they just shake their heads and whatever, it's just one of those things. But yeah, it was kind of crazy. I mean, no ammo. And I've heard that story multiple times from, I know a lot of gun enthusiasts, and they go shooting or whatever and you can't find ammo, or they're really low on their supply. Yeah, kind of crazy. Hey, there was a question in here, Kirk. I think it was for you about appraisal waivers.
Yeah. Becky was asking if we're still getting appraisal waivers. The answer to that is yeah, nothing's changed there. Appraisal waivers is an FYI for those folks who maybe know about them but don't know kind of what they are. I'll take a minute here and just give you the refresher course. All of you guys remember when Fannie Mae and Freddie Mac rolled out that what did they call it? It was the home value collateral underwriter is what they called it. You guys remember that? And everybody was freaking out that all of the appraisal data had to be entered into collateral underwriter, and Fannie Mae and Freddie Mac had to approve the appraisal. And everybody's freaking out. It was going to slow down transactions a whole bit. We never really saw that, but what they were doing is growing their database, and that's still happening on every appraisal today. and they're growing their database of homes and areas and values. And now that's all built into the automatic underwriting system in their algorithm. So it's all automated through the typical, what we call AUS, automated underwriting systems, that spit back a result based on the property, the price of that property, if it's in contract, if it's a refinance, the estimated value we're telling the algorithm, and then the qualifications of the borrower, FICO scores, debt to income ratios, loan to values, things like that. So it's all built into the sausage at this point. And so unless they go tweak the algorithm, which they could do, you know, if all of a sudden we see a crazy housing recession or something, they could go tweak the algorithm. But no, that thing's on autopilot at this point. So the same frequency, I suspect, this year as we have been. Any other questions? Banks trying to apply brakes a little bit on prices going up precipitously. Yeah, I don't think they have a whole lot of control on that. I mean, they could crack down on their like underwriting requirements. That'd be Fannie Mae, Freddie Mac, though. That wouldn't be the banks, as far as all of a sudden saying you can't go to a 95% loan to value or something like that, which I don't know when that would ever happen. The banks can adjust their pricing and make rates higher relative to their peers, so that that particular bank maybe, and Chase is a great example of this, when the refi boom hit, Chase put really strict guidelines in place of who they would even take an application from. So they were just basically throttling that business. Wells Fargo's notorious for that as well. Sometimes they'll be super aggressive. Other times they don't want any part of it. And 100% of the time their service is horrible. So don't ever go to Wells Fargo. This is going to be recorded and put out for people to see, but that's okay. It's true. So Wells Fargo is a horrible place to get a mortgage done. Any other questions, folks? One lender client spoke to this week said that they slowed down on the waivers the last 2 weeks. That might just be an anomaly with that particular lender and some of the clients they had or the properties they had. But as far as the algorithm, it's all built in, and Fannie Mae's algorithm is different than Freddie Mac's algorithm. Yeah, they talk behind the scenes, but they are truly independent of one another. So I think that's just an anomaly. Cool, good questions. All right. Want to put a bow on this one and kick off the new year well. It was a good one. Any parting words, Shane, my friend?
Hopefully we'll see everybody next week. If you've got any questions or anything I can help with, definitely let me know, or let Kirk know. Obviously, if you've got some buyers, we'd love to be able to have the opportunity to work with you as well. So thank you all for coming today.
Yeah, and you know, if you got questions that aren't pressing questions, you know, the whole reason we do these, Shane and I, we can probably talk for another hour if you guys wanted us to. It probably wouldn't be that interesting, but we could, especially if I get a refill on my coffee. But the reason we do these things is for you guys. And so we love it. If you guys have questions to bring in, and not just for Shane and I or Emma, but for the group. You know, we've got a group of peers here in the industry that we can utilize, that we all benefit from. So you got some questions during the week that aren't, you know, pressing, that you got to answer immediately, save them up and bring them in on Fridays. This is a great forum for that. So, and as always, Emma will be with us typically a couple times a month to share her wisdom and make us all better with social media. So it's going to be a great 21, everybody. Look forward to it. Thanks for coming. See you.
Thanks, guys.